It's Creepy Crypto Friday. That's right, it's Creepy Crypto Friday. And so, why are we talking about cryptocurrency today? Generally, we don't touch the subject with a 10-foot pole. And I don't touch that particular subject with a 10-foot pole because I personally don't invest in crypto. So I wanted to kind of address this issue because this is something that obviously is in the news, and it's because of probably if anybody has any monochrome of news that you follow, it's because of the whole FTX mess that is going on. The FTX, which was an exchange for cryptocurrency, and then they had an FTT token that was established based on based on that particular crypto exchange that was set up by Sam Bankman-Friedman, and it's an interesting kind of saga of what we're looking at today, right? I'm not going to say that I told you so, but I did tell you so. Meaning, what I mean by that is this, right? See, you never want to gloat when somebody loses money and somebody thinks that they're investing into their future, because it may be you tomorrow. My only challenge with cryptocurrency, and I'm not saying that crypto technology is not a great technology. It may be a phenomenal technology. Personally, I do not understand it. Clearly, it's something new. Now, the reason I have a challenge with this whole thing is because 99.99999% of people who invest supposedly in crypto, they call it investing in crypto, but it has nothing to do with investing. It has to do with one thing, and that is called gambling. What they're doing is they're basically saying, I'm going to put money into these tokens, into these exchanges, into these the 10 derivatives that they have based on all these cryptocurrencies, and they're hoping that they're going to basically double and 3 times and 10 times their money. Right? There's nothing wrong with it, but my only challenge with this is when they call it crypto investing. Right? To me, it's not investing, and it's gambling, and that's it. And that's what I want to address. Right? Why do I call it gambling? Right? See, investment is something where you make a educated or a calculated risk versus a reward calculation. Right? So what that means is this, that if you are basically going to go and put your money into real estate, if you're going to go put your money into the stock market, if you're going to go do something like that, right? What is the difference between real estate versus stock market? In real estate, you're going to basically evaluate a property, hopefully, because not always, you can't understand the risk. You certainly cannot control the market forces. So let's just say, hypothetically, if you're going to buy a property that you're going to flip today versus you're going to buy a property, a piece of land, you're going to put a house on it, and then you're going to spec build it and spec sell it, right? The risk involved in both these ventures is going to be very little risk, higher risk relatively, right? So now higher risk, I say that to say this, that if you're buying a house, let's just say, and the back end value of the property is $300,000, you're buying the property $120,000. You're going to put 30, 40, 50,000 into rehab on the property. It's not whether you're going to make money. You're going to make money in the deal, right? The question becomes is how much and how quickly. Meaning, what if the market suddenly changes? Maybe you can't sell it for 300,000. Maybe you have to sell it for 280. Maybe you have to sell it for 260. Maybe you have to sell it for only 250. But as long as you have not grossly overpriced the back end value, even if the interest rates are up, within a 3, 4, 5, 6 month period, your relative risk, right? See, in investing, what you're doing is you're measuring the relativity of risk, right? What is the relative risk involved in any sort of a venture that you are going to do, that you choose to do? That is what you're measuring versus in a new build, right? Why is a new build riskier? The reason a new build is riskier is not because inherently there's risk. The reason is the amount of time involved generally in a new build is going to be longer. generally the gestation period, meaning by the time the property comes out of the ground, you get your permits, maybe you have to go for zoning, then you have to go for permits, then you have to basically get all the infrastructure in, then you have to go ahead and build the property, then you have to market the property and hopefully sell it to the end buyer. And generally the product is going to be a higher price. Hence, because of the amount of time frame involved, because of the amount of moving parts in a new build, your gestation period is going to be longer. Hence, a new build is going to be a riskier proposition than just doing a small, normal fix and flip. But yet, if you can find a new build where the acquisition cost of the land is low, there's a high amount of demand in the area, and the demand stays, and you're putting a property up that is in a very medium price range, right? Whereas if you bought a flip and you bought a very expensive property or a flip, that's going to be a very, very sort of a boutique type of a property, or it's a white elephant, which is that it's not a property that most people are going to like. It's something very unique, right? You may have a very hard time finding an end buyer. So then your flip may be more difficult, even though it's just a fix and flip, because the amount of moving pieces and parts there are. So the reason why I say that a new build is going to be more difficult most of the times is because it just has more moving pieces and parts, and you're in less control because the period of time in which you're going to have to hold the property is going to be much longer. Now, whereas if you're investing in the stock market, what are you doing? If you're buying a good company, you're buying a small little piece of a good business. And hopefully you know how to analyze the business, but generally big publicly traded companies, generally, this is a general statement, that are regulated, there's a board, there's all these things in place that make sure that the company's future is hopefully bright. Generally, you hope it's run by good quality management. So what are you doing when you're buying a stock, right? The right way, or the way Mr. Warren Buffett would look at it, is he says we're buying a piece of a business, right? So if you've ever heard him talk about this, he says the market is like a drunk sailor that one day he wakes up, feels very good about it, and then he's willing to pay exorbitant prices. Another day he wakes up, he's mad, and then he's depressed, and then that day he feels down. Right? So the whole point is that whenever you're investing, you're trying to analyze a product or a service that's available. You're buying a stock, which is a small piece of the business. It's no different than, let's just say, if you were to buy a house and you have 10 people that are either GPs, LPs, whatever the case may be, and basically each person puts up $10,000. Let's just say it's a $100,000 house, right? Each person owns a tenth of it. So and then all 10 of you can be voting members as to what is going to happen with the house. We're going to rent it out. We're going to do fix and flip. We're going to go to Airbnb, whatever the case may be, right? In a business, whenever you invest in the stock market, it's the same thing, except you're not in control. It's the board of directors, the CEO, so on and so forth. There is a team that supposedly is making a good decision for the business. Now, in terms of the cryptocurrency market, right? The technology behind cryptocurrency seems to be very exciting. It seems to be something totally new, and it seems to be a technology that 99.99% of people do not understand, right? There are a lot of people making some amazing videos on YouTube about crypto, and they have their own terminology. They have a huge kind of then it's the next fad, and that's why there's a lot of people that are interested in it. And whenever there's a new technology which builds a lot of excitement, like we've had with crypto, there's nothing wrong with that, right? So if you say, hey, I'm going to take $2,000, $10,000, $20,000, $100,000, which is maybe a small little part of your portfolio, right? Then it's no big deal. So when I didn't have a lot of money, if I had put, let's say, $100 into something, if I lost it, oh well, I lost $100. Like today, maybe it'd be $1,000 or $10,000, or even if I spent $50,000 into something, if I lost it down to zero, is it going to change my lifestyle? No. Right? If I lost $50,000, is going to change my lifestyle? No. $100,000? No. Now, suddenly, if I lose $1 million, is it still going to change my lifestyle? No, but Am I going to want to lose $1 million in something? No, I would consider that a hit, right? 30, 40,000 bucks probably wouldn't bother me that much. But I'm in the business of making good financial decisions where the risk and the reward weigh out. See, with crypto, my biggest problem is that everybody looks at the reward and there's no way to analyze the risk. Because if you can't underwrite the underlying asset, right, that technology, because nobody knows how to underwrite that particular technology, it's basically the bigger fool theory, meaning that somebody else is going to come behind me and pick up that Bitcoin or whatever I'm buying for a higher price. And there's nothing wrong with that, right? If Bitcoin is where it is today, whatever it is, $15,000, $16,000, $17,000, $18,000, if it goes up in the future, fantastic, right? You made some money. Maybe you doubled your money. Maybe you 3 times your money, or whatever the case may be. But the problem with that is this: there is no way of underwriting that risk, meaning there is no way of evaluating whether it is a good investment because you're gambling. That is the problem, is when you can't underwrite something, meaning when you cannot have a way of evaluating that risk, right? Because there are so many factors, not only factors whether the management that is running that particular sort of that particular coin, it's if they have the right intentions, they're not governed by any authority around maybe some authorities around the world are there. There's no rules and regulations. There's no box in which they play. Right? Pretty much the rules are being written as we speak. We're seeing that. And it is a very new sector. Now, that doesn't mean that maybe 5 years from now, 10 years from now, it may be something that may be wonderful, right? It may be. But yet today, what we're seeing is because people do not understand it and because there is no history behind it, what happens is people are in because it's the new thing to do. They're super excited about it. They have all these theories. There's nothing proven. Not a single thing has been proven yet. They didn't even know if they can secure their wallets yet, right? There are all these things. Now, that doesn't mean it's a bad thing, right? That means if you are excited about it and whatever amount of money you can put aside and you decide to invest that and you call it investing, which I would call gambling, and you think that that's okay, that you want to play with it, go right ahead. There's nothing wrong with going out playing. So maybe sometimes some people will go out to a really nice, expensive dinner, 3 or 4 friends. Maybe it costs you $500, $1,500, $2,000, depending on how fancy a place you go to. You say, well, we had an experience. You don't go look at it and say it was an investment, right? That's an experience. So to me, this is the same exact thing. And the reason why I'm talking about it is that I'm seeing people that are putting money in crypto or derivatives or the exchanges and all the different things that are around it. And they call it investing. I think what they're doing is, in my opinion, that they're labeling it incorrectly. If they say, hey, listen, I'm putting some money here, let me see what happens. If it goes up, goes up, doesn't go up, doesn't go up. Maybe I learned something, maybe I didn't, maybe I'll laugh at myself. I think that's fantastic. There's nothing wrong with it, right? Do what you choose to do. There's no big deal. But if you're saying, hey, I'm going to bet my future on it, then I think you're making a gross mistake, because that is not investing. That is just gambling. And if I was a betting man, Mr. O'Leary has had Mr. Wonderful. I don't know a whole bunch about him, but whatever little I have followed him on, I've seen his videos on the internet, so on and so forth. The guy from, I think it's from Shark Tank, whatever one of those shows are. Supposedly, he was one of the spokesperson for a company for FTX, and supposedly he got paid millions of dollars, and then today he's blaming 10 other people instead of somebody that just stole the money, right? The simple collapse of FTX is a very simple problem, that it's one thing when somebody basically borrows money from you to start a business. They actually start the business, and for whatever reason, because of market forces, because of what happened, maybe they didn't make sound decisions, that the business failed. That's called a business failure, right? There's no big deal. Happens every day of the week. There's no big deal. But if that money is taken from you and you invest in something with the impression that I'm going to go and do X with it, and yet I take that and go do something completely different, right? Be it buy political clout, be it go invest somewhere else. That is not what the money was raised for. In this case, right, the money was put in a in an exchange which is supposed to have a fiduciary duty to everybody that basically puts money into the exchange for safekeeping so that that could be invested. And yet that was used and misappropriated money that was put in different places. The reason I'm talking about this today is because this is such big news today. And I hear about this from people from time to time, and they're like, Andrew, you got to have a piece of it. I'm like, listen, I don't mind if I have somebody that I feel that's knowledgeable. I'll give you a few $1,000. And if I have faith in what you're doing, and maybe if we lose it, we'll laugh about it and say, oh, well, didn't work out, right? But certainly I would never call it investing. I would certainly label it as gambling. As long as you label that part of the money that you put aside and you call it, this is my gambling account and I'm going to take this money and go gamble with it, then just understand that you may just get entertainment. You may not like it at the end of it, because the end, it's like going to Vegas and basically trying to play the house. The house will always win as long as they keep you at the table, right? Which is simple. If you walk into Vegas, you have $100 and you bet on any of the games, and guess what? You win. Not only do you win the $100 and you get another $100, now you're up $200. If you take your $100 and back in your pocket and then gamble with the house's money, it's okay. But maybe you didn't make anything, maybe you didn't lose anything because your money is back in your pocket. But if that does not happen, and if they can keep you at the table, right? This is why in Vegas, everything is inside the casino, because they want to keep you gambling at the table. And the bigger the whale you are, the bigger the gambler you are, the more spiffs, the more things they're going to make available to you, like from a simple thing like a upgraded room, to free food, to shows, to a limo to pick you up from the airport. If you're really a big whale, then they're going to basically send you literally a private jet to your city and get you to come gamble. This is not done because you're going to make money. The more you can stay there and gamble, the statistical odds are that the casino is always going to win. That's just statistics, right? It's pure statistics, and it's pure based on the amount of play that you give that particular casino. In this particular case, it's the same thing, right? They're taking a piece of it. When you put money into an exchange, you're doing trading, guess what's happening? A small percentage of it, however small, is going to keep going in their pocket. If you make money, fantastic. If you lose money, fantastic. Makes no difference. They're still going to make money. And the challenge I have with crypto is this, that it is something that nobody understands. 99.999% of people who claim to be the experts, they understand nothing about crypto, yet they claim to be the experts. Just because they can talk the lingo of crypto today, they somehow seem smarter, because you and I are not involved in it day in and day out. Yet there is nothing proven, and there's absolutely no history. That doesn't mean that somebody who may have invested $10,000 at some point today may be up and they may be a multimillionaire. But 99.9% of people so far are going to lose. For some people are going to win. And it's a no-win commodity, at least right now as it sits. In the future, there may be a use for it. In the future, it may be something that may be absolutely groundbreaking technology, and there may be a use for it. But yet today, there is absolutely no use for it as we speak today. That does not mean that new technology will not come out of it. Yet today, to go put your money there, if you want to gamble, go right ahead. Have fun. Then if you lose it, don't feel bad about it. If you win, fantastic. Be happy about it. But generally, to me, it is not at all investing. That is a absolute wrong term that is used when people say, are you investing in crypto? There's nothing to invest in, right? To me, it's pure gambling. Are you gambling with crypto would be the right terminology, because that is exactly what 99.99% of people that are in the crypto markets that are doing. I'm sure there are people that are not going to be happy. with my comments, and I'm sure people will disagree. You have your opinions, I have mine. I have stayed out of that particular market because I don't understand it. Same thing with stocks. I don't have enough study. I don't have enough time invested in the stock market. A lot of people, that's what they're great at. I tend to stick with real estate. I own one stock, right? One Class A share of Berkshire Hathaway, which I bought back in 2009. That's all I own, right? One single share. At the time, I think I paid $72,000 for one share. Today, I think somewhere around $450,000 for one share, something like that. Wherever it's trading today, I've never really looked at it. I don't look at it. I always wanted to go to the meetings in Omaha, and that was the only reason I bought that particular share, one Class A stock of Berkshire Hathaway, and it was because it was an homage to who I think is the best investor of all times, and that happens to be Warren Buffett as well as Charlie Munger, probably the two brightest minds, at least in recent history, that are probably the best people in terms of investing and a very conservative type of investors. So I wanted to bring this up today. We called it Creepy Crypto Friday. I'm having some fun with this whole thing. But what is important to think about is that please do not take your hard-earned money and think this is investing. If you're okay with taking a little bit of your money and gamble with it and see what happens, hopefully you have a wonderful outcome. I hope you make $1 million, right? I'm happy. If my friends make a lot of money doing something that they weren't sure about and it made them a lot of money, it's fantastic. There's nothing wrong with that at all. But this is something important to understand, that this is not investing at this point. In the future, at some point, maybe there'll be rules and regulations around it, and there will be a actual use for this particular technology that will actually create and generate money from it. And then it may make sense to evaluate those companies and then invest some of your hard-earned money in those companies. Having said that, it's Friday. If you haven't joined Burr Cashflow Investors Group, please make sure that you join. The whole point of the group is, from time to time, we want to bring different speakers and different thoughts into the group so that we basically expand our mind and we get to think more. This week, the appliances that were won by somebody in the group because they invited a bunch of their friends. We will pick out a name again in the next month or so, where somebody gets to win. So if you have friends, if you have family, join the group, invite them. And when you invite them, we keep a track of how many people you invite. And then we'll put everybody's name that is in that group in the hat. And then if you've invited a bunch of people, you have higher odds of winning. So this is Andrew. Thanks a bunch and have a great day.